America is currently facing bankruptcy, and today we're going to explore how a country once recognized as the wealthiest in the world ended up in this situation. The crisis is so severe that the nation can no longer cover the interest on its debt. To understand this, we have to reflect on the observations of those who have witnessed these developments over the years. We could see this collapse coming. But what does it mean? Imagine someone taking out 10-second mortgages on their home while relying on a job at McDonald's that doesn't pay enough to cover those mortgage payments. The consequence would be living behind the McDonald's restaurant. This is essentially what the country is experiencing now. It's crucial to grasp how the richest nation in history became financially broken, yet many people were unaware of the danger back then, and many still are today. How did the country reach this level of insolvency? How did we accumulate $1 trillion in interest payments when our revenue doesn't match that amount? Adding to this, there are obligations like Social Security, Medicare, and the massive burden of student loan debt. These entitlements far exceed even the already staggering national debt. While the reported national debt stands at $33 trillion, the real figure might be closer to $200 trillion or even $260 trillion. This is an unimaginable sum. The path to this debt can be traced back to 1976 when the national debt approached $1 trillion, which sparked significant public concern. People feared that $1 trillion debt would destroy the country. Yet, here we are now, with the debt skyrocketing to $33 trillion. In just 3 months under the Biden administration, the national debt increased by another $1 trillion. It took the country 200 years to accumulate the first trillion, but in just 3 months, an additional trillion was added to the total. This alarming trend raises concerns about governmental mismanagement and deception. Throughout history, events like the Kennedy assassination, the Gulf of Tonkin incident, and the Pentagon Papers reveal a pattern of misinformation. Many younger people might not be familiar with these events, but they might recognize recent examples, such as the missing weapons of mass destruction or the Nord Stream pipeline explosion. The pattern of deception persists. For those seeking career opportunities, monitoring government misinformation is a growth industry, arguably more promising than artificial intelligence or other modern fields. The problem has become too vast for any single person to handle, and the Federal Reserve plays a central role in this issue. That's why we find ourselves in this difficult situation. To explain it to younger generations, how did we arrive here? In 1945, the United States was the wealthiest nation in the world, and the US dollar became the global reserve currency. After World War II, the dollar was backed by gold. We had sent millions of people to fight in Europe and the Pacific, and by 1944, we emerged as the richest nation. But now, the country is bankrupt. At that time, the US told the world to stop holding gold reserves to back their currencies. Instead, they encouraged other nations to hold US dollars and use them as the foundation for their own currencies. Soon, people noticed the US was printing far more dollars than it had gold to support. In 1944, the US was still seen as a trustworthy nation, and banks globally accepted the US dollar, which could still be exchanged for gold by foreigners. I recall being in Peru, where the central banker showed me stacks of US dollars in their vaults, valued as highly as gold itself. But in 1971, President Nixon ended the gold standard, making the dollar nothing more than debt. This event should have signaled the downfall, though we could have seen it coming even earlier, in 1933, when President Roosevelt confiscated gold from Americans. Citizens couldn't exchange paper money for gold anymore and were required to hand over their gold. Failure to comply could result in fines of up to $10,000 or imprisonment for 6 months. Roosevelt, who introduced Social Security, now also bankrupt, orchestrated this. Worse, the government bought the gold at $20 an ounce and then increased the price to $35 after seizing it. This swindled billions of dollars from Americans. This is information young people aren't taught in school because the education system is influenced by Marxist ideology. I remember in 1964, while in Hawaii, I noticed a US quarter that looked like it contained copper. When I asked my father about it, he simply advised me to get good grades, dismissing the concern. I didn't realize at the time how the system was changing under Marxist influences. Economics can be like a religion, and in this case, it was being shaped by Marxist thinking. The quarter's copper content was a sign of deeper economic manipulation. In 1964, that was an example of Gresham's law in action. Gresham's law states that bad money will drive good money out of circulation. I remember asking my father what was happening, and his only advice was to get good grades. That mindset represents part of the problem. Today, at Arizona State University, you see revolts on campus, led by 39 professors who even attacked me last year. The real issue lies within our educational system. Many people couldn't recognize that the quarter was no longer real because the education system fails to teach the fundamentals of money. They don't understand what gives a piece of paper value. They think milk and eggs simply come from Safeway, without considering the farms behind those products. This lack of understanding has allowed fake money to deceive the nation for generations. The key point here is that the Federal Reserve was created in 1913, marking the first Marxist action in the United States. Some may wonder how the Fed can be considered Marxist. The answer is that a central bank is one of the key elements in Karl Marx's 10-plank Communist Manifesto, where the establishment of a central bank controlling money and credit is a major step toward a communist state. And who controls the central bank? College professors. Take a look at the Secretary of the Treasury. She is a former college professor. Janet Yellen, for example, fits this description, and she is also a Marxist. The public constantly asks what the Fed is going to do, but the real question is, what are you doing? Are you still working hard, saving money, and investing in the artificial stock market? Many people blindly follow what they are taught without understanding the historical context of how America, once the wealthiest nation, has become bankrupt. This morning, I looked at a chart of the national debt, and it's clear we cannot even pay the interest on that debt. The situation is unsustainable. Taxes cannot be collected fast enough, and the Fed cannot print money quickly enough without collapsing the value of the dollar. The dollar is already in decline, and inflation has reached historic levels. How can a nation sustain such debt without destroying itself? Even members of the establishment are beginning to question how long this can continue. Moody's downgraded U.S. government debt just last week, and Fitch also downgraded it. In fact, the downgrades have been happening since 2011. Yet when Americans hear this news, most don't understand its significance or think there's anything wrong. They rely on having a college degree or believe their kids are in good schools, but those institutions are indoctrinating them rather than educating them. My poor dad, who had a PhD and worked at Northwestern University of Chicago, used to tell me to stay in school and not question the government. The more he said that, the more my rich dad warned me about the government's constant lies. The old joke about knowing a politician is lying when their lips move isn't funny anymore, it's reality. And now we're bankrupt, yet people cling to the idea that having a kid in a good school is enough. That mindset motivated me to write Rich Dad, Poor Dad in 1997. I wanted to expose the state of American education. In one example, a young girl outside a school couldn't say how many stripes are on the American flag, claiming it was hard to tell because the flag was moving. Another student didn't know what country Canada is in and guessed Vermont. Our biggest budget expense is military education, yet basic knowledge is lacking. In 1971, when Nixon took the dollar off the gold standard, I was in Vietnam, flying off a carrier in the Gulf of Tonkin. I was wondering how I got involved in the war and why I was fighting. Around December, I received a letter from my rich dad informing me that Nixon had removed the dollar from the gold standard on August 15, 1971. At the time, I didn't fully grasp what that meant. But looking back, it marked a turning point. How did America go from being the wealthiest country in the world in 1944, after defeating Japan, Germany, and Italy in World War II, to becoming the largest debtor nation in history within our lifetime? We can no longer pay our bills. The Federal Reserve is run by academics like Janet Yellen, who resembles a character from The Addams Family. Meanwhile, Biden is the most corrupt politician I've ever seen. The first thing Biden did was shut down the Keystone XL pipeline. His first act in office was to cut that off. As a result, oil prices jumped from $30 a barrel to $130. On Inauguration Day, it was clear that he couldn't wait to take actions that would harm the middle class. People speculate that Kamala Harris would eventually take over, adding to the concern. The speed of these developments was shocking. I discuss these matters with experts like Jim Rickards, who has worked with the CIA, served as a defense attorney, and was involved with long-term capital management. He authored Currency Wars. When I ask Jim about my numbers, he confirms they are close. Unlike college professors who often lack real-world knowledge, Jim understands these dynamics. He predicts gold could reach $15,000 an ounce. Right now, gold is around $2,000, but people still cling to their stocks and bonds. Meanwhile, the bond market has been crashing. It's been a brutal year. Given the devaluation of the dollar, $15,000 gold isn't unrealistic. In 1970, gold was $100 an ounce, and within 5 years, it rose to $850. Silver also surged from $5 to $50 during that period. When I warned people about this and mentioned I was buying silver, they laughed. Later, when the market crashed, they kept laughing. Now, those same people are holding bonds and T-bills, which are also crashing. It's brutal. The streets are filled with financial ruin. When Nixon took the dollar off the gold standard, Treasury bonds essentially replaced gold. Now those bonds are collapsing, jeopardizing the retirement plans of baby boomers who hold 401ks full of stocks and bonds. They might not be able to retire. Our education system has conditioned us to go to school, get a job, and work hard for money while they keep printing it. That's insanity. Even as a child, I questioned what was going on. The confusion remains the same today. I remember someone borrowing money from their brother-in-law and asking me to take over their position. But who wants to deal with a counterparty sitting in jail? That situation is similar to what happened to the Hunt brothers. Many people got caught off guard, including those in powerful positions or part of the deep state. This is reminiscent of when FDR confiscated gold and silver. The lesson is clear. The government claims to be here to help, but in reality, they're helping themselves. People think this time is different because we are in a so-called new economy, but the fundamental principles remain unchanged. We have just emerged from the longest bull market in history, which lasted 11 years. In 2011, I made the greatest profits of my life during the collapse of mortgage-backed securities and collateralized debt obligations. As real estate values plunged, I took advantage of the situation by borrowing $300 million to purchase prime properties across the Southwest. This period marked the largest and longest bull run in history. Now, I see many young investors putting their faith in Bitcoin and Ethereum, convinced that this time will be different. However, Bitcoin has already experienced significant crashes. The Federal Reserve's influence in these matters is astonishing. People often say not to fight the Fed, but the real question is, can the Fed create oil, gasoline, or food out of thin air? Despite this, many have been conditioned by Wall Street to follow whatever the Fed recommends. It is hard to understand why anyone would trust figures like Janet Yellen, Joe Biden, and Jerome Powell. The situation is absurd. When Paul Volcker tackled inflation by raising interest rates, the debt-to-GDP ratio was only 30%. Today, it is 125%, assuming those numbers are accurate. The notion of a soft economic landing is just another empty promise from the Fed, as history shows it has never happened. Over the last 3 years, I have earned more money than ever before, and that is what I want to highlight. There are alternative ways to invest, and believing Powell will come to the rescue is misguided, especially when the reverse repo market operates at $2 trillion daily. Yet, people continue to trust Powell. Personally, I do not own stocks, mutual funds, or ETFs. I avoid paper assets entirely. While others may choose to invest in them, I believe many have been misled by the Fed, the Treasury, and the financial system. Society has taught us to go to school, get a job, pay taxes, and invest long-term in a diversified portfolio of stocks, bonds, mutual funds, and ETFs. In 1974, when I returned from Vietnam after 2 tours as a Marine helicopter pilot, I saw the consequences of communism firsthand. That same year, the government enacted ERISA, which led my generation of boomers into the stock market via 401ks and IRAs, even though they lacked financial literacy. Around this time, I watched in disbelief as schoolteachers suddenly became financial advisors, which was a case of the blind leading the blind. Now, Baby boomers are relying on their 401ks and hoping the stock market remains stable while Social Security faces collapse. This is not a coincidence. I am just a former Marine lieutenant who piloted gunships and survived 3 crashes, but even I can see how misguided people have become. This is the unfortunate outcome of following conventional advice and trusting the education system. We followed the advice we were given. Don't fight the Fed and invest for the long term in a well-diversified portfolio of stocks, mutual funds, and ETFs. They told us not to worry because Powell is supposedly channeling Volcker. But with the debt to GDP ratio at 120%, that's a joke. When interest rates were being lowered, it felt like heaven for me since I invest in apartment buildings. I own 13,000 apartment units, and each time the Fed dropped interest rates, the value of my properties increased. In addition, I improved the properties and refinanced them. As a result, I currently own nothing on any of those properties, and all 13,000 units generate cash flow. They say in a bull market even the clueless feel smart, and I've listened to these clueless people. After the 2008 market crash, caused by issues with the repo market and the bad credit of Lehman Brothers and Bear Stearns, the government responded by pumping more money into the system. Instead of fixing the economy, they just kept printing money, even as it was on the verge of collapse again in 2011. Now we are facing the consequences of those decisions. I use debt strategically because debt is tax-free money. I rehabilitated my apartment buildings, all 13,000 of them, using the cash flow to acquire more properties. As interest rates dropped, I refinanced, so my current financial position is strong. My approach relies on debt, unlike those who preach living debt-free. That's their opinion, not mine. I never flip houses, because flipping leads to tax consequences. Instead, I refinance, which provides tax-free money. When I began investing, interest rates were at 12%, but I still leveraged debt and avoided taxes. Debt offers me tax advantages through appreciation, depreciation, and amortization, which allow me to offset my income taxes and bring my tax liability to zero. My cost of debt is effectively zero. When Biden canceled the Keystone XL pipeline, the oil I was selling went from $30 a barrel to $130 a barrel, providing additional tax breaks. However, I also realized that Biden's actions would lead to financial disaster for the country. I'm not specifically blaming him, but someone clearly wants to bankrupt this nation because oil is the lifeblood of civilization. After graduating, I worked for Standard Oil of California as a tanker officer, so I understand the importance of oil. I was also involved with the Alaska pipeline. When I look at what's happening, it's clear to me that we are being sabotaged. By driving up inflation, the poor and middle class are being pushed into financial ruin, and this plan was already in motion before Biden even took office. Watching these events unfold, I can't help but think that someone is actively trying to sell America down the drain. I invested in oil wells, not oil stocks. Although I worked for Standard Oil, I don't invest in the company itself. I invest in oil still in the ground. As a wildcatter, I take the risks that most people advise against, but I enjoy it. Similarly, I have gold mines, not because I recommend it to everyone, but because it works for me. There are more opportunities today than ever before, but not if you follow the conventional advice to go to school, get a job, pay taxes, live debt-free, and invest in the stock market. Right now, we are in an everything bubble, far larger than the 2008 bubble, and it includes not just stocks and bonds, but credit as well. However, this collapse will also create new opportunities for those who are prepared. Be cautious about whom you listen to because the ideas in your head can be your greatest asset or your worst liability. The brainwashing runs deep, and many poor people misunderstand the difference between assets and liabilities. They think their home is an asset when, in reality, it's a liability. In contrast, I own 7,000 rental properties, which generate cash flow every month. Meanwhile, many people live in large homes, but money flows out of their pockets, leading them toward financial ruin.